Hello everyone, welcome to the market opening bell for Tuesday, February 24th, your 10-minute guide to the stock market. The US Supreme Court has rejected Trump's reciprocal tariffs, and Trump is scheduled to visit China at the end of March. Hong Kong stocks rose sharply on Monday. The Hang Seng Index opened 385 points higher, climbed as much as 742 points to reach 27,156 and closed up 668 points or 2.5% at 27,081. The X-share index gained 237 points or 2.7% to close at 9,197, while the Hang Seng Tech Index added 173 points or 3.3% to finish at 5,385. In the absence of southbound flows, total market turnover for the day stood at 172.9 billion Hong Kong dollars. The A-shares market will resume trading today. On the Hong Kong stock market, export-related stocks and e-commerce names advanced. Tektronic Industries rose 3.5% and Shenzhou International climbed 4.9%. Following the U.S. Supreme Court's overturning of President Trump's tariff policy and his announcement of a new 15% tariff under Section 122, the average tariff rate on Chinese goods is expected to fall from 32% to 24%, which is positive for Chinese exporters. However, this relief may only be temporary, as the White House continues to explore targeted tariffs on specific industries and economies. The weaker US dollar triggered gains in commodity stocks. Shandong Gold rose 4.6% and Zijin Mining advanced 5.3%, making Zijin the top-performing blue-chip stock of the day. AI model and robotics stocks retreated. Zhipu plunged 22.8% and Minimax dropped 13.4%. Dobot and UBTech fell 3% and 2.6% respectively. Zhipu issued an apology for three major issues with its GLM coding plan AI subscription package: insufficient rule transparency, overly low GLM5 grayscale rollout, and a poorly designed upgrade mechanism for existing users, and simultaneously announced handling and compensation measures. The company explained that traffic after the GLM5 launch far exceeded expectations and capacity expansion could not keep pace, forcing a phased rollout of GLM5 in Max, Pro and Lite tiers. Max users now have full access. Pro users have access but may encounter throttling during peak hours due to high cluster load, and Lite users will be gradually opened in off-peak periods after the holiday. Affected Lite and Pro users can apply for refunds on their own. Reports indicate that the Lenovo Group North America channel head Wade McFarlane sent a letter urging partners to place orders quickly due to ongoing global memory chip shortages. The company expects to raise prices in early March for commercial products under its Intelligent Devices Group, including PCs, smartphones and tablets. Lenovo shares rose 1.6%. The Kingboard Group released a positive profit alert. Kingboard Holdings expects net profit for the year ending December 31st, 2025 to surge more than 165% year-on-year to over 4.32 billion Hong Kong dollars, driven mainly by growth in reported profits from the investment business segment and the copper-clad laminate segment. Kingboard Laminate forecast net profit for the same period to rise more than 80% year-on-year to over 2.39 billion Hong Kong dollars, thanks to strong demand for copper laminates and upstream materials such as glass yarn, glass fabric and copper foil, which led to significantly higher average selling prices and increased sales volume compared with 2024. Market demand remains robust. The investment business segment also recorded profit growth. Technical analysis. Since early February, the Hang Seng Index has largely fluctuated between 26,300 and 27,400, featuring 2 downward gaps and 2 upward gaps, resulting in quite erratic movement. Given the sharp drop in US stocks on Monday, the Hang Seng Index has a high chance of opening with a downward gap today, breaking below the 20-day moving average at 27,004 points and the 10-day line at 26,892, with short-term support at 26,700. A blizzard caused traffic restrictions and disrupted business activities across much of the U.S. East Coast, yet both the New York Stock Exchange and Nasdaq operated normally on Monday. Investors remain concerned about the impact of artificial intelligence on multiple industries. In addition, President Trump has raised global tariffs and warned countries not to abandon trade agreements reached with the United States, or he will impose even higher tariffs under various trade laws. U.S. stocks plunged on Monday. The fear gauge VIX index rose 1.9 points or 10% to 21. The Dow Jones Industrial Average fell as much as 894 points intraday and closed down 821 points or 1.7% at 48,804. The S&P 500 dropped 71 points or 1% to close at 6,837. The Nasdaq Composite lost 258 points or 1.1% to finish at 22,627. The Nasdaq Golden Dragon China Index, which tracks Chinese concept stocks, fell 71 points or 0.95% to close at 7,478. Anthropic unveiled its new cloud code programming feature, causing IBM shares to tumble 13% and drag down the Dow. Software stocks came under renewed pressure, with Microsoft falling more than 3% and CrowdStrike dropping 10%. Financial stocks also underperformed. American Express slid 7%, while Visa and JP Morgan each fell 4%. Payment platform PayPal reportedly received acquisition interest and surged 7% against the broader market. Novo Nordisk plunged nearly 15% after its next-generation weight loss drug CagriSema delivered inferior weight loss results compared with Eli Lilly's flagship product. Eli Lilly, by contrast, rose 3%. Defensive stocks fared better. Walmart and Procter & Gamble rose 2% to 3% against the trend. Heightened uncertainty surrounding Trump's tariffs boosted safe haven demand, pushing gold prices up nearly 2% to about $5,200, hitting a 3-week high. On the economic data front, U.S. manufacturing new orders for December 2025 fell 0.7% from the previous months, while durable goods orders declined 1.4%. Transportation equipment orders dropped 5.4%, largely due to a 24.8% slump in non-defense aircraft and parts orders. Non-durable goods orders remained largely unchanged. Our stock pick today is Nexteer, stock code 1316. Nexteer is a globally leading supplier of steering and power transmission systems, leveraging its high-tech electric power steering EPS and steer-by-wire SBW technologies. The company has become an important supplier to Tesla. It has secured the steer-by-wire order for the Tesla Cybertruck, which will enter large-scale production and delivery in 2026, providing the order with high visibility. In the Chinese market, benefiting from the national policy tilt towards new energy vehicles and the formulation of steer-by-wire chassis standards, together with the production ramp-up of a large number of new and newly acquired projects over the past few years, the Asia-Pacific segment's revenue in the first half of last year grew 15.5% year-on-year to $686 million, while overall group revenue increased 6.8% to $2.242 billion. In the first half of 2025, net profit attributable to shareholders surged 304% year-on-year to $63.48 million, exceeding the full year 2024 net profit of $61.71 million. Adjusted EBITDA reached $230 million, up 16.8% compared with the same period in 2024. Gross margin stood at 11.5%, an improvement of 1.5 percentage points year-on-year. The improvement in profitability was mainly driven by higher sales volume, enhanced efficiency, and performance gains. The group maintains a global footprint and continues to expand across the Asia-Pacific, North America, and European markets. It has established technology centers and smart manufacturing bases in locations such as Suzhou and Mexico. In the first 6 months of 2025, the group successfully launched production of 31 new customer projects, 3 in North America, 4 in Europe, the Middle East, Africa, and South America, and 24 in Asia Pacific. Of these 31 projects, 23 were new or newly acquired businesses, and 8 were from existing businesses. 21 of the launch projects were for customers' pure EV models. The full-year new order target is $5 billion. In addition, optimization of North American facilities has delivered results, and operating expectations for the second half of 2025 remain solid. The global automotive industry is shifting towards electrification and intelligent transformation. Steer-by-wire is an essential technology, and Nexteer enjoys a clear first-mover advantage. The group has secured orders from Tesla as well as multiple Chinese new energy vehicle makers. 2026 will mark the start of the harvest period. Suggested buy price $7.90, target price $8.80, stop loss $7.50. I do not hold the above stock.